April 15th may be well behind us, but some taxpayers are still dealing with Uncle Sam in the form of an audit. We'll hear with more on how taxpayers can best handle an income tax audit is CPA John O'Neill. John is head of the Connecticut offices of the Roni Deutch Tax Centers, family business that you are running here in Connecticut. It's good to have you on the program.
Glad to be here, Becky. Thank you.
All right. When you get the paperwork that indicates that you are the subject or could be the subject of an audit, it's pretty scary. I mean, should it intimidate taxpayers?
No, I don't think it should. If a taxpayer has documentation for their credits and their deduction and has reported all the income, it really is not a frightening thing at all.
I guess many of us wonder why we're spit out in the first place.
Well, the IRS has various triggers that will allow them to make a judgment as to whether they'll audit you or not. So, for example, if you have large itemized deductions in relation to your income, or if you're a self-employed person and you have many business expenses that are larger than your income, or if you have...
Let's look at those, as you're going through, and we'll take a look. We have a graphic now that shows some of the triggers. So I guess if there's a discrepancy with your reported income between the various federal forms, right?
Correct. So 1099, W-2. Very often people forget that they have 1099s from interest or dividends, or it could be whatever, and they don't report those income. The IRS is going to match them.
And if they don't match, there you go. All right, business expenses. In other words, if you're a small business and you're claiming excessive number of expenses.
In relation to the income. Now, they may very well be legitimate. You just have to document them. And that's one of the things the IRS will question on it in an audit.
Okay, and then dependency exemptions. That's easy for the federal government to figure out, too, isn't it?
Well, I think it's very easy, but for example, you reported 2 exemptions last year, and then the following year you reported 5. Well, that may trigger. Now, you could have very well had triplets during the year.
That's true. It's not impossible, right. But you have to have that documentation once again.
Exactly.
All right. Typically, how does the federal government notify you of indication that you're going to be audited?
They will send you a letter. The letter will be very specific as to what they're questioning. They'll tell you that they can handle it by mail, in which case you get the documentation back through the mail. Or alternatively, if it's a number of items and it's a little more complex, the letter will say what office of the IRS nearest you should report to.
All right, so you shouldn't have to really travel too far.
Absolutely not.
Okay.
Absolutely.
If you're going for an audit, should you bring a tax attorney with you?
If they're questioning, just say, travel expenses in your business, and you have very good records for your use of your automobile for business, or gasoline and mileage and all that, I don't think you need a professional. Once you get into more complex area of the law, or there are more things that the IRS is questioning, it may make sense to have a professional, a CPA, a lawyer, an enrolled agent, and that person, by the way, could attend the audit on behalf of you. You don't even have to go.
You don't have to go.
You don't have to go.
If you think you're going to be the good American taxpayer, and you're going to show up to this audit and you're going to show a history of paying on time and paying the right amount and having it approved by the federal government in years past, is that a good idea?
I don't think it's a good idea at all.
Why?
Taxpayers should only bring what the IRS is asking for. The more information you bring, the more information the IRS will look at and raise other questions. So, for example, do not bring the subsequent year tax return. So they're auditing 2009, for example. Don't bring your 2010 tax return, if it's a couple of years from now. Because they'll look at it, and they may raise other questions.
So you can have another...
And you have another audit, and
it can go from there.
Yeah.
Is the IRS always right?
The IRS is not always right. We make mistakes, certainly, as taxpayers. The IRS makes mistakes, too. So don't assume the IRS is always right. You have a right to appeal if the IRS are making an adjustment and you really think they're wrong, or it could be a complex or gray area of the tax law where you disagree with the IRS. In those examples, though, I would have a professional working with you.
All right, you've got an event that's coming up at your tax centers in Connecticut. These are the Roni Deutch Tax Centers. It's going to be Tuesday, August 24th. Tell me what you're going to be doing for taxpayers and consumers.
For those taxpayers who have not filed tax returns in prior years, we will offer them a free tax return. So if they have 1 year that's unfiled, they can come in between the hours of 10 a.m. and 6 p.m. to one of our 5 tax centers. The tax centers are in Stamford, Norwalk, Milford, Orange, and West Haven. So 10 a.m. to 6 p.m. To get where the address of our locations, you call 203-842-2107, and we will do a free tax return. And if you have multiple years past due, we will do those from with a 10% discount from our normal rates.
And there are plenty of people that don't file who actually might have a refund coming their way.
There are taxpayers who haven't filed. Probably they fall into 2 categories. Those who think they owe the IRS nothing because they have withholding from their paycheck, when in fact, if they filed, they would get a refund.
Okay. Well, if you'd like to find out more, once again, it's the Roni Deutch Tax Centers. And John, always good seeing you.
All right, Becky. Thank you.
All right. And we'll be back with more 12 on the Money after the break.